The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman. My pleasure to be here Monday through Friday, market days, 11 o'clock till noon. Of course, if you're listening, you know it's 11 o'clock till noon. Dow's down 97 at 17,604. S&P's down 8 at 2,066. Comp index is down 7 at 50.59. You've got gold, which is down sharply, had a really strong bounce. In fact, let me just show you a chart right now. This is the chart of the 10-minute E-minis, but this is the chart of gold. I'm always a little bit behind in the gold. But look at that big spike there from about 9 during while Tom was talking. So that's, let's see, Larry does. So John Logan does 8 to 9. Folks, if you really want to get to know a system very well, if you want to be able to appreciate all the different technical input that's been demonstrated through this particular TAS market profile that you can look at, John's giving a masterclass tonight. It's really a class that is, I call it a masterclass, of course. All it is an explanation of the methodology that he and his cohorts have put together over, not just, they haven't just put it together over a month or 2 or 3. It's years, in fact, it's decades worth of experience that they've finally put together. It is remarkable to look at. It tells you about, it forewarns you about turns in the smaller time frames. It tells you about the larger ones, gives you profile, it gives you the levels. You know, when I look at, let me just grab this chart here, I'll show you something. This is really a very sophisticated version. His is a sophisticated version of something that I worked on for myself. I had someone working with me, maybe 7, 8 years ago. I use it sporadically because my other techniques seem to really lock in on turns, etc. This really just confirms it every weekend. Every second weekend, I'll finally remember to go through it. Let me just show you something here. This is what I'm showing right now, the SPY. Look at the resistance at 212.52 in the daily. And the high, in fact, was 211.66. Is that good? It showed this morning that there was support at 204.72. What was the low? 206.06. That's on the daily. The 120, the 10-minute chart shows you a cluster of support levels, and we're getting that bounce. So what he's done is used his own methodology to produce levels that I've got here. I've just got blue, light blue, and green. But what he has is horizontal levels. In fact, you can just look at the profile, and you don't have to use numbers. You don't have to use the chart at all. You just have to look and say, oh, that one's working well, that one's not working well, that's in a buy mode, etc. So I just wanted to mention that right away because I believe it's at 6 o'clock today, and it's going to be something really worthwhile perusing, studying. You can get I believe you can get a free, I think it's a free month, but check it out. Whatever it is, it's really worth at least getting a sense of what a very sophisticated system can do, and that's just my recommendation. All right, so that was John, and then came Larry Pesavento. Fabulous program as always with Larry. Great levels to look at, a great use of his Gartney and the butterflies, and then of course you get Tom and Tommy. That was also a terrific show, going through a whole bunch of different aspects. Now, what I'm doing here is I'm showing you that there's an inside wedge resistance line between the pink and the gray that said that there should be a really good bounce up to that level. I actually did all this work down when we were at that level much earlier on, and this shows you that resistance is the resistance right now. Now, I'm going to explain a couple of things, but let me just run the numbers, continue running the numbers. So gold's down 6 at 10.78, silver's down fractionally, it's at 14.25. Platinum is down strongly. I mean, high-grade copper is just, I've been talking about it as being horrible, and it isn't horrible. It is pathetic. It is just down sharply. It has taken out the left side low in the weekly chart. It only has the rest of this week, which is tomorrow, today and tomorrow, and the whole of next week in which to rebound above the 21960 level of the 28th, the week of the 28th of August, because if it doesn't do that, it's going even lower. I mean, look at this monthly profile. Look at that. Oh, this is the 120-minute chart. Looks terrible, but it's not nearly as bad as look at the monthly. Oh my goodness, the monthly. And Larry was talking about this. He said there's been a divergence. Usually they talked about Dr. Copper, because Copper seemed to project where the economies were going around the world. Well, look what it's been doing. It's this big diversion between the stock market going higher and copper going lower. So it's now lost its panache. Something's different, and it's gone down to a leg D in the monthly chart, just underneath all the support levels. It better find support pretty soon, otherwise it's going to go much, much lower. Real quickly, crude oil, I think the report comes out 11:30, maybe. Anyway, crude oil is down 85 cents at 42. You've got bonds up 12, 30 seconds at 152.5. And I'm going to just quickly do the dollar right now because I want to go. We've got a caller from Gloucester, Mass. And it's Frank. And I just want to show the dollar is pulling back quite nicely, just gently from the peak D. And I'm going to talk about all the 136 consolidation days, etc. But I'm going to go straight to Frank in Gloucester. Frank, how are you?
Good morning. Very well, thank you, Basil.
Good.
You and I you looked for me last week at BP, and I'd like to look at it again. It was showing some good signs when we last looked at it, but it's fallen out of bed, and you had me put a tight stop in, and that worked, so I'm out of it. But boy, I'm wondering now if it can't come back down into the $30 to $31 range.
I'm pleased you brought this up today, and I'll tell you why. I was looking at Exxon, made a peak F top in the Chapman wave back on the 3rd of November, went to 87.44, trading now down 9%, not today, it's 9% since then. It's at 80.40. I looked at CVX because I went through all the Dow stocks last night and early this morning. That went to a peak F. I said there's a chance that maybe it's making an alternate count, but it looked highly unlikely. So this is what I was looking at. Now what happened was your BP was only in leg C. But I think I also mentioned the reason why I wanted a tight stop is that the technicals at the time were not exactly conforming to the rally. And therefore I said, I still think this is a rally within a major downtrend. So that's why to keep the tight stop. But if it's a dividend stock, you really have no choice but to keep a tight stop, because look what would have happened if you were in it and it's pulling back and it pulls back, say, well, it's now down 37 to 33. Let's just say it's down from anyone who got in recently. It's down, call it 8%. It's actually down 11%, but let's call it 8%. What happens now to that whole dividend spiel? Now you're looking at capital loss, and that dividend really, if you're holding it for a long time and you think that this is a stock that can go back into the 40s to give you that capital gain and the dividend, that's one thing. The longer term to me says there is a problem with oil in general. There is a problem with natural gas in general. There seems to be an abundance. And this is just what I'm reading the charts to be saying. And therefore, I think that the stop was worth having. And now I'm going to say to you, hold off. I think you're right. You said, can it go down to about the 31 area, maybe even the 30? Well, the low that was made from the rally was at 29.35. And one of the things I'm looking at here is that the 9-period moving average in the weekly chart is at 34.51. In the monthly chart is 36.46. It went above that, couldn't hold it. And even the 9-period moving average of the daily at 34.90 has been taken out. So I'm now looking at this and I'm saying, you know what? Let's hold off. I would prefer to be buying an uptrend than a downtrend. And right now it's got that H pattern in the daily, H pattern possibly in the weekly. Monthly is still a single leg A up. It hasn't really shown that it's made a lower high. You have to wait for December before we get that. So how about this? I would recommend you just hold tight for now. I'm going to just jump to the 120 minute. Yeah, the 120 minute chart says that the stochastic could flatten out. It could even give a good bounce. But the gap down this morning, down 73 cents, BP, PLC, ADS. This is not a good sign. It's down 73 cents, down 2.12%. There goes that dividend, right, just in one day. So I really would like you just to hold off. And there's no use taking a double risk on this, and that would be the price, and it would be the dividend, because you can see you can lose that dividend in an hour if you haven't got the right trend. So at this particular point, because Exxon's down, CVX, I want to COP, is that, let me just check. COP, probably that's the bank stock. No, ConocoPhillips, right. Yeah, and ConocoPhillips has got an A, B, C. Oh, it's also failed at a C. I'm very negative on these longer term. Shorter term, there was a nice bounce. The weekly chart says if, in fact, let's go back to BP, and I'll give you the level to look at. If, in fact, it stops declining and it can hold above 32.53, which was the high of the second before it started gapping up almost every day, that's the area, 32.70 to 32.20. Let's see if it can hold there, rally, and see if the technicals can start to improve. Then I might suggest, okay, now I could start the H that goes to an M pattern in the weekly chart. But I can only do that when I've got some certainty. And you see, the stochastic in the weekly chart is at 66%. Exxon stochastic is a little better. It's at 89. That's very good. That was one of the reasons. The reason why I was looking at these as the possibility of having the weekly charts form kind of an M-shaped pattern, which means like if Exxon trading at 80 and hit 86 just 2 weeks ago, if it can remain with good support of the 79 to 78 level and then start another rally, that rally will be good because it could last 6 to 8 weeks, so you might be able to get a dividend and you'll get capital gain. I don't want it if I'm looking at the technical starting to fail. But if the MACD and stochastic in stocks like an Exxon, I might even recommend to you that you stick with the, in a more conservative way, although for you it will be a little bit more aggressive because the price is high, but you'd be buying less. I might recommend that Exxon or Chevron are possibly the ones to get into if they have another arch formation. I don't see much more than an arch formation, but boy, going from, say, Exxon going from the 78 level back to even 84 or 85 is very nice. Capital gain, and then if you're there for the dividend, that's a bonus. Do you see what I'm getting at here?
Yes, absolutely. How do you define a peak C on here?
On the BP?
Well, let's do BP.
Okay.
And then how do you reset to a peak A if it were to go above that peak C again?
Oh, that's a great question. So how about this?
I have your CD, so you can give me a page on your CD.
Okay, you know what? During the break, I'll pick up the CD and I'll show you exactly what we're looking at. Folks, we'll be back. We'll be back with Frank in Gloucester, Massachusetts.
If you're looking for a great opportunity to diversify your financial portfolio and hedge against the falling stock market, consider the new market-safe Metals Hedge CD from Everbank. This 5-year indexed U.S. dollar-denominated CD gives you exposure to metals with gold and silver components and allows you to hedge against falling equities with a short component on the SPY ETF. You can earn up to 45% capped upside payment at maturity if gold and silver increase in value and the SPY ETF decreases across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Don't let fallen markets get you down. Get the Metals Hedge CD. The November 12th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This is sponsored content. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back. We're back with Frank in Gloucester, Mass. We're looking at BP, and the question was, in the Chapman wave methodology, and I have a CD called Introducing the Chapman wave. What slide is this? This is slide 58. So let me just show you here. This is the Introducing the Chapman wave methodology by Basil Chapman, chart analysis in the stock market. I have all these different chapters, goes all the way through to chapter, I should always remember this, it goes to chapter 27, and then there's a conclusion with a glossary and etc. So it's really a 476-page, basically a book. And it's a book in the form, what did I say it was, page, I hope I remember now, 48 did I say? Anybody remember what I just said for the page? Oh, my goodness. I think I said 48. Here we go. No, I didn't. Hey,
Basil.
So I had it already. Let me see if I can find it. Give me 1 second. I'm going to find the page in a second, but let me just show you here. If you're looking at the BP chart from the low that was made in the 28th at 29.37, there was a single move up, very sharp move that went to a leg A, and then a pullback, fractional pullback, and then it went to B. The characteristic of this looked like the pattern that I call the single leg A up failure pattern. It doesn't fail if, in fact, the stochastic does not go above 80% and then immediately come back under 80%, and with a price breakdown of between 50 and 60% slide from the high. In fact, what happened is this held the 9-period moving average very nicely. And then what happened is started another little move to the upside, and it went to, look at that, A, B, C. You know what? I couldn't understand why this didn't give a C. This is a great lesson. I'm so pleased you called. this is what's called, the inside buy. I talk about when you've made a peak and you pull back and that, whoops, why is this getting an hourglass? I did not need that now. Oh, no. Oh, there it is. Okay. What happens is, you see you went to that peak B, and that peak B was on the 9th at 36.31. It pulls back. Now I'm going to make this much bigger. I've been looking at this and saying, okay, it was the 200-period moving average that deflected the price. But this is a great lesson. You see the low that was made on the 13th at 34.31?
Yes.
There's an inside buy because you can go, I always say count the peaks wherever you are. That's an A, what I call the gray A, because that A is underneath the previous peak B. It turns out it then goes to a fractionally higher high on the 22nd at 35.99. Well, the 35.99 is still underneath that peak B. And then what happens, so that's another letter you've got there. And then what happens, I didn't even see it because I've got that trend line that I drew. It went to a higher high at 36.09, still underneath the 36.31. Now that peak C that we were looking at becomes a D. And now you've got it all lined up. So let me, I don't know if you're going to, are you able to see the charts that I'm posting right now?
I'm following it on my own, but I do see the C and the D.
Okay, now you understand how we got it. Now let me show you something. You see how the MACD, I'm going to draw a vertical line right here at that original peak B, the 36, whatever it was, 30-something. And now I'm going to draw another vertical line at the peak D that was just made. Look at the MACD. Look how low it is. Look at the stochastic. Remember what I was saying about that single leg A? It'll fail if it goes above 80% and then comes back down.
Yeah.
Well, look what happened. The stochastic ran up over 80% and then came down sharply. Yeah. It also hit the 200, it just missed hitting the 200-period moving average, and then it came down. Now, the reason why I said something's wrong with this picture in my mind is that it shouldn't have been a peak C minus. It should have corresponded to, look at Exxon. Exxon made a beautiful peak D. No, I'm sorry, it went high. It went to a peak F. But the point I'm making here is that it would be unusual for the sector to be moving higher, and then out of the blue you get one stock that didn't. And here's a CVX Chevron at peak F, and that corresponds. Yeah, we go back to the BP chart. Exactly on the same day you got your leg D. So now you've got everything in unison. So I'm so pleased you asked me about the question, but you know what I'm going to do? I'll do a little work over this sometime later today or this evening. I'll try to find exactly what pertains to in the CD, and then tomorrow, because it's Technical Friday, I'll deal with it a little bit more on the technical level. But that is based on the methodology. But keep in mind what we've got now is you've got a buy mode that went to what I call a Chapman wave inside buy mode. You went to a peak A, B, C, and you know my rule of thumb, when you get an overlap, and that, remember the chapter called overlapping wave?
Yes.
So in a sense, we've got the overlapping wave here as well. So that overlapping wave, chapter 16, I'll talk about it tomorrow. So I hope that helped you, Frank, but in the meantime, step aside.
Very much.
Thank you very much for calling. That's Frank in Gloucester, and I'll be right back. Dow's down 144, S&P's down 13.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. I've got a great email question here. It says, wondering if you could maybe answer a question on your show about market bellwethers. I use GS, Goldman Sachs as such. Please comment. GS, of course, now in the Dow. I was in a full short position, approximately ES 2095, the other day. When I saw GS holding that crazy 3% breakout gap. That's this gap right here, right? Then heard on your show about the Stork leg and also saw GE action. I also noticed the on-balance volume wasn't making new lows. I got too nervous about being short and closed the majority of my position literally 10 minutes before it tanked yesterday afternoon. I still have a small one on. Could you please talk about, number one, is Goldman Sachs a good leading indicator or not? 2, do these bellwethers always precede market action, or sometimes, have you noticed they even might follow it? Example, GE breaking down a bit today. I've also noticed sometimes the RUT, the IWM, that's the Russell 2000 index, will lag, then catch up, which I just followed the moving averages now, but I was just too nervous. Happens a lot. Thanks for your thoughts, Basil. Chris. Hey, Chris, let me just tell you something. This is what I was looking at. We were in the short position in my opening call. We were in a very short position. We had volatility index. We have the 300% short the Dow. And I was looking at this, and we had other short positions as well, even put some new ones on. But this is the issue. GE is still holding well. It's up 1. It's in leg D in the daily. Could have deflected lower in the MACD, but it hasn't yet. Stochastic's at 89%. That's very good. This is a very unusual pattern to have the stochastic way at 90% and the MACD is still down and the price up. You've got leg C in the weekly chart. That suggests, I mean, there's no other way I can count it that it should go to a D. And the General Electric monthly chart, I can't even discuss it. It's either a G, which is negative, or a brand new A, which says we're going out at least to get 7 waves to the upside, at least into the first quarter of next year. Okay, so that's GE, my bellwether stocks. So GE is my short-term bellwether, but this time it's not doing very much. It has so far said the market should hold well. But let's just leave today out for a moment because I want to show you IBM, very weak, still very weak, down at $1.21 at 133. And I've kept it in as a bellwether because, I don't want to just chip and change. I've had these things for a long time. So this is A, B, alternate account C. This is leg D going to the 127.60 level. That's been my target for a long time on IBM. But wait a minute. Look, Triple M is trading down at Triple M. Triple M is trading down $1.50 at 157, but holding very nicely in this pattern right now. Hasn't even taken out the low of 3 days ago. Peak C, leg C, maybe peak C if there's no new high by tomorrow, which there shouldn't be. And the monthly chart is still very good. Stochastic in the weekly is at 90% and the MACD is still expanding. UTX, my bellwether stock, more intermediate term, has just picked up from the bottom. It went from 124 down to the most recent low of about 86. It's trading now at 99. That's a 13 point, pretty darn good move. Look at the weekly chart, holding beautifully. Look at the daily chart, up $1.18. So, and now let's go to Goldman Sachs, because I've been thinking for a long time I'd like to add a bank stock or financial. Goldman Sachs would obviously be the one. I did this show a long time ago. I did a webinar for subscribers. Actually, it was an open webinar. And the webinar, I spent a lot of time showing the parallels of showing the different, what was going on in the late 1920s when Goldman Sachs went public in 1920, how they were responsible for so many IPOs during that year. A whole bunch of things were going on. So I think Goldman Sachs would be a great financial to have, to maybe add. Usually I have guest artists. Now look at this guest artist. Usually I have DuPont. Look at DuPont. Barely pulling back today, 60 cents after announcing bad earnings and then saying that our CEO is going to leave. Bam, it runs to the upside. And look at the spectacular move. So here's what I'm looking at. This is a bifurcated market. There are areas in the market that are extremely weak. And that goes quite a lot to the retail sector. And that retail sector goes to the copper of maybe the international weakness is there. At the same time, you've got these pockets of strength. Now, there were some other stocks that I was looking at. Let's see what Facebook's doing today. I'm going to get you a question and answer right now. Look at this. Facebook barely down 33 cents. Now, I just saw in the den, someone posted that Israel had just, I can't even find now. Israel strikes Syria. World War III fears shake the globe. Come on, do we need this right now? All right, well, Israel strikes Syria. And that's where, look what happened. You had a fantastic move from the low of 2053 running in a straight line up to this dashed trend line resistance at 2063. 10 points. That's like 80 points in the Dow, more. And then there was the news and kaplop, it comes back down again. Well, my contention is that in a bear phase, all news, good news and bad news, impacts the market negatively, but you've got to have the VIX index rally. Well, the VIX index has been pathetic lately. Today is up in leg C. It's up 5.8, let's call it 6%, up 0.96 at 17. Start getting into the 17s to the high teens, and you've got selling pressure, right? But look what happened recently. there was just this trading range. It couldn't really get traction. And even now, it's not really big traction. It's just some traction. I mean, look at this. It was at 53.29 back on the 24th of August. So then it came down just a little bit, down to 12.80. I would call that a decline. So here's the issue. The issue is that there are pockets of strength. But I've been waiting for sector by sector by sector to start to tank. And what did we get this morning? AZO, one of the greatest, the best of the AutoZone, truck parts, car parts, etc. I've been waiting for that to turn around, and it hit 803.50 on the 6th of November, and then it's come back down a little bit, but not all that much. 780 right now. It was at 803. Historically, so far, there's just nothing. Look at the weekly chart. It's barely noticeable that there's a pullback. Look at the monthly. It hasn't even begun. But wait a minute. All of a sudden, you've got AP, one of those stocks that we had shorted periodically, and then it kept going higher. And look at this peak D, doji high. It had a Chapman wave, a 2-bar reversal, and it comes down, and it goes from the 201.21 area, trading at 169 on the 200-period moving average, down 12.5%. Look at the weekly chart. Peak E didn't even have a chance to make it peak because it just dropped straight away. And a leg F in the monthly. Now we happen to be short one of the auto parts companies, and it's pulled back quite sharply today. But I'm waiting for, this is one of the final sectors. We waited for the IBB. Finally got the IBB down right now, but the high was 400. It hit 284. It's trading at 326 right now. So sector by sector, the XLV, we're still waiting for it to really tank. It's down, but we're waiting for each sector one at a time, because that's going to suggest that we have a deeper correction. But when you've got this strength in stocks that are kind of key stocks, then you've got to say to yourself, if there wasn't this news at this particular time, maybe about the, Israel and Syria, maybe this rally would have continued. That was my thinking at the time, that there was no reason why the rally should have stalled like this. We should right now, without that news. This is my thinking. How do you really know? I don't. But we should have been testing the 2065 level that was the high of the 20 to 9 on the 12th. That's yesterday. And that's on the E-mini, 10-minute E-mini. So we'll see now if this is going to be the situation that says in a bear phase, all news is treated as bad news. Selling comes in, especially towards the end of the day, as fund managers get ready for the next selling phase. Overnight, the S&P tries to rally, it fails, and opens the next morning down between 9 and 15 points. And then there's a rally, but the rally fails. You just keep making lower highs and lower lows. So far, that's what we've been doing. So now I'm going to go to the question. I wanted the preamble because it covers some of the thinking that in a different way, but with the same contention that there were enough positives to say that at this particular time, the Dow has taken 6 sessions, this is the 7th, that was up until last night, 6 sessions to come down, and all it's done is been hugging the 9-period moving average. And if it's going to tank, today was the day, and what I said to subscribers, the next 120 points up or down is going to be very important. If it's up, it says we're just going sideways, and if it's down, it says, whoop, sell signal to sell mode in the Dow. So now let me go to the answer of your question. I too took profits or got out yesterday of those particular shorts. That's the ones that relate to volatility and the Dow. I was kind of upset because that we were taken out, because it's okay to get taken out. But when I looked at the charts last night, I said, you know what? Maybe I was premature in getting out because we picked the top perfectly. And then I said to myself, let this play out. We still have enough shorts if the market goes down, and we still have longs, and the longs seem to be holding right now. I don't think they're going to hold it much longer, but they're doing pretty nicely up until now. So the bifurcated market is a market that you could trade by having longs and shorts. But I can just tell you this, that if, in fact, together with the Fed, now here's the other little catch to it between, I'll go back to the Goldman Sachs in a moment, but the TLT is up 71 cents. Well, if the TLT under these conditions is actually rallying, that's bonds. If bonds, the Lehman 20-year T-bond fund, if it's actually rallying, that's kind of traditionally what you would see, at least the way I always read the market, that bonds, the safety of bonds become effective when the volatility to the downside in the stock market becomes apparent. If the Fed is going to raise rates, I don't think if there's another 150 to 200 points down by Monday, that the Fed is going to take the chance right now. Technically, it was just recently I said, you know what, the Fed missed that opportunity with the Dow and the S&P almost at their highs not to raise rates if they want to do it all. That was the time, because then you can give yourself 3,000 points to the downside and say, hey, 3,000 points is nothing. You don't want to do the 3,000 points when you're already 1,000 points lower or over 100 points lower in the S&P, if that's their thinking. So here we go to the question. What about Goldman Sachs as a leading indicator? What about the IWM? What do you use as leading indicators? I'm going to make it really simple for you. And the simplicity is that it doesn't mean you're going to always be right, but it means at least you have a benchmark. And that benchmark is that, yeah, you could use Goldman Sachs, but you need to use it, doing it every single day and seeing that if you've got yourself a little formula that says, when Goldman does X, I've noticed that the market does Y. When Goldman does X, the market does X. When Goldman does Y, the market does Y. You got to know when you got your divergences. When I started in this business, I was not in the business. I was just a regular person with some money, and I started trading, and I found that Prime Computer was an incredible instrument for telling me what the market would do. And I used that for years. And then I got to thinking, you know what if Prime gets taken over, which eventually it was, I'd be in trouble. And I'd start developing other technicals. So my thinking here is that I would prefer for you to use something like the VIX index and just make it as easy as I try to. The VIX index is now at 17.03. It's at the 200-period exponential moving average. It's trying to break above it. The way the MACD and stochastic are starting to rally now, especially because of today, says that it could actually make a leg D. That's number one. So in your trading, let me go to your question again so I can answer it exactly. Yes, you can use these other indicators, but try to assess what got you into the E-mini shorts, in other words, selling the E-mini in the first place, because that's the characteristic that you want to build and turn it into a tool. You want to say to yourself, oh, I was getting short because X and X and X. Now, you spoke about the on-balance volume. Let me just do this with the on-balance volume here. Let me go to, I saw it a second ago. Yes. Let me just go to the SPY and show you. Oh, wrong one. SPY, not the 10-minute chart, but this one. Look at the SPY. This is the blue line. If you look at the SPY, and one of the reasons why I set up the trade originally was because of this. Look, from that low right there on the blue line, that's the unbalanced volume. Essentially, that's a running total of up days and down days. On the up days, you add it, and the down days, you subtract it. Everybody will have a different number because you start in a different place probably, but it's the principle. And it went A, B, C, D, double top with lower highs as the market went higher. So yes, you can use the D. Tomorrow, Technical Friday, I'll try to get a little bit more into that part of it. So I'm trying to answer your question.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN.
Hi, folks, we're back. So let me just run these again now. Here's Amazon down 233. So this could be a Chapman Wave 2-bar reversal, 675.96 on the 11th. And today is 675.64. That's what, 32 cents? 32 cents lower. The high, that is. So maybe we're doing a Chapman Wave 2-bar reversal rollover, but the stochastics at 96%, the on-balance volume. Look at the on-balance volume, the blue line. Inside A, B, C, D, E, F. It's at an F. So maybe we're turning around, but it doesn't have to coincide exactly, especially if the stochastic holding at 96%. NACD is still good. And of course, you've got the whole season coming up, Christmas season, all these different things going on, holiday seasons. This is great action. So bifurcated market, a market that has good stocks, but not just good stocks, stocks that are at all-time highs or new recovery highs. And you've got stocks that are just plain old failing. They just cannot get out of their own way. We've seen a number of those over the last few days. There was a mention in the desk in the den about Rolls-Royce doing so badly with the engines. Well, if you look at the RYCEY, I think it was, or RYCEY, Yeah. Look at this. Now, I don't actually, maybe I've got something wrong here in the chart. The Rolls-Royce Holding Company is 106.34 was the high in January of 2014. It's down at 8.23. So something must have been. There was that month where it just plummeted. Now maybe there was something going on there. But if you're looking around, Rolls-Royce are completely sold out. Bentleys, especially the very popular two-seater convertible. It's a fantastic car, Saturn One, and it's just so comfortable. It's unbelievable. Sold out. In fact, there's a waiting list in some areas. So we're looking at, this is almost the same as the market. I believe very strongly that we're going to have to follow the RTH. So yeah, Chris, I'm going to try to articulate a little bit more about the indicators that maybe you can use, but I think you already have your own good indicators. You were short, and I don't blame you for being a little nervous yesterday. You saw that rally, and then you saw the late decline, and then you saw this morning, earlier on, before the future started to tank, there was an attempt to rally. So there is buying intensity in some ways, and that it doesn't happen, this kind of action doesn't happen that often, where you've got such a divergence between stocks, especially in my case, when I'm looking at my Dow quartet, actually holding very well. And that's just saying that, okay, let me go to numbers, because we're about to run out of time. You're going to go to Dell. Don't forget, this evening at 6 o'clock, John Logan, I think that's really worth listening to, and maybe signing up for a free demonstration, etc. Just go to the front page. Now, let's go to this. You've got the VIX index. Let's make it as simple as possible. The VIX index is at 1703. If it starts to climb by 2:30, 3 o'clock, because there's just been no rally whatsoever, and goes to the 1750, if it takes out the high of the day of 1737, this market is going to go down, and then all of a sudden I've got a sell mode in the daily chart of the Dow. Weekly still looks pretty darn good. In numbers, if you're looking at the Dow itself, very strong candle to the downside. This is we haven't had too many big red candles like this. This is one of those. So it looks to me with the technicals, the price is now moving together with the very poor technicals. On the downside, you've got a trough A, B, maybe a C. I can't tell right now. Whoops, can I do this quickly? Can't do it quickly. I can't. Oh, there it is. 90 million 4, and you've got 90 million 4. Are they the same? 90 million 4. Wow, it's exactly the same. So that means that we're in legs C to the downside on balance volume. So keep in mind, if there is a bounce today, it'll be A positive, not V positive, but A positive. The Dow can close above 17,630, but if it closes near 17,500, that's a big problem. Hey, I'll be back with Tom later today. Otherwise, I'll see you tomorrow.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.